Good day, everybody. Welcome to Hospitality Talks. We've got a great session planned for you focusing on business in Europe. Hospitality business are part of European social and economic fabric, bringing diversity and vitality to city centers, rural communities, and villages across Europe, providing millions of jobs and contributing nearly 10% of European Union's gross domestic product. Combining tourism, high quality food, services, and culture has been part of European way of life, and visitors from all over the globe have flocked to this region for a very long time. As we all know, hospitality industry has faced many challenges and issues in the recent past, the latest being the pandemic, constantly changing customer expectations, political, safety and security concerns, skilled labor shortages, increasing operating costs, and rapid technological changes make hospitality industry an increasingly difficult and competitive environment. I'm Abid Butt. Glad to be here with you. Our panelists today will help us better understand these and other challenges and navigate through what's to come in the future. And as always, I'm here with my co-host, Sam-Erik. Sam.
Thank you, Abid, and welcome to Hospitality Talks, everyone. For the ones who are if you're now watching this live, and I'm sure you are since you see us, just write in where you're viewing from, and please ask any probing questions. We have a great panel here who are more than happy to answer those questions that you are presenting to them, and we will be the ones who will be making sure that they are getting those questions from you. And if this is the first time you're visiting, we are on YouTube and LinkedIn and Facebook, and we greatly appreciate if you subscribe to our channel, and it will mean the world to us. So without further ado, Abid, let's start with the conversation and bring all the panelists together.
Yes, please. Let's do that. So Sam, our all-star panelist today includes Dermot Crowley, who's the Chief Executive Designate for one more day, I believe, and then tomorrow he takes the reins permanently for Dalata Hotel Groups. He has had a long history with the group, and after serving for 8 years, he's taking the helm. He's been an instrumental part of the executive team that has overseen the growth of Maldron and Clayton brands in Ireland and UK since the company went public in 2014. We also have joining us today Lionel Benjamin, who is a hotelier and entrepreneur that has been fully engaged in the hospitality industry for a long time. In the deepest time of the pandemic, or the darkest time of the pandemic, Lionel co-founded Ago Hotels, and they offer hybrid lease models to hotel landlords. In a very short time period, Ago has been able to secure 10 hotels and have approximately 5 more in the pipeline that should be opening up within the next 30 to 60 days. And they have a very aggressive growth plan. And last but not least, Nikola Reid, who is the Senior Director with Hospitality and Leisure with Alvarez Marsal. Nikola has been involved in the industry for a while and has a wealth of international knowledge in this sector, having advised clients in 60 countries across every continent. Her clients include private equity, institutional, high net worth individual, investor, lenders, and operators towards regarding commercial strategy, M&A transactions, and operational and profit improvements. We're very glad to have you all with us. Welcome to Hospitality Talks. So if it's okay, We will start out with Nikola. If you wouldn't mind starting us out, tell us what your clients are focused on these days, Nikola.
Sure, and thank you for both having me here today on Hospitality Talks, Abid and Sam-Erik. Delighted to be here. So, Alvarez Marsal provides various services to the travel and hospitality industry across M&A, transformation and restructuring, analysis and planning, tax advisory, data business technology. I think last year, the focus for our client base was very much on taking action from the furlough scheme, hotel closures and staff reductions, implementing flexible cancellation, rebooking policies, and just generally implementing other measures to help them be a lot more responsible to the market situation and customer needs. I think, now operators have become really good at reacting to this. They've learned how to deal with a lot of these challenges should further lockdowns occur. But some of the key focus areas we are still seeing and working with clients include a couple of points. I think first and foremost, if there's a lockdown, how quickly can we start operating again? So when hotels open, what's the break-even point as a target to decide whether it's worth opening? And this is clearly highly dependent on location, positioning, segmentation, and the underlying demand out there for the individual property. Number two, really important, how do you minimize cash burn? Cutting costs effectively. If you can't control the top line, what can you control on cost? And here, our hospitality team have not only been helping clients to take out costs, but also working with clients to really drive flexibility and variability into the operating and cost model. A key example is some work we've done with Accor recently. It's out in the public domain. Our team did a huge operating model transformation where we took out 200 million euros of sustainable cost out. And we also did an operational turnaround for Accor Invest and supported on one of the sector's largest COVID-19 refinancing. So it's really looking at what can you take out at the head office, shared service level, looking at what functions are adding value to the business. And we've also been working with operators and PE-backed businesses in particular on, what costs can be reduced, what can you automate, what can you cluster, what can be outsourced. Thirdly, clients have also been focusing on reducing the break-even point to prepare for how we come out of this period coming forward. We're facing third waves, quarantine, new variants ahead, and it's pretty obvious we're going to be dealing with this for a little bit longer. And the new normal may no longer support pre-pandemic staffing levels. So something that a lot of our client base have been looking at is right-sizing operations at the asset level. We've been building dynamic staffing models for portfolios up to 250 assets, where essentially occupancy defines staffing, and helping our client base right-size operations by department per asset. I think managing the balance sheet is really important as we come out of this as well, especially for companies which have strong ownership interests. This is really, really important. And I think we expect to see a bit more financial restructuring here from 2022 onwards. And then just last but not least, how do we manage the new normal? How do we respond to new demand trends as we look ahead? Initially there was a view everything would return to normal. Well, a year and a half into the pandemic, and I think, everyone's acknowledging that there are going to be some elements which will return to normality, but there are nuances of consumer behavior which obviously will redefine demand and segmentation for hotels.
So you talked a little bit about last year as to what folks are focused on. At this particular point, are most of your clients looking at the recovery models, pace of recovery, and what are those conversations like, Nikola?
Yeah, absolutely. I think everyone's debating when 2019 levels will be achieved, and broadly the view out there is between 2022 and 2024. But I think it's also really important to examine and understand and predict how people and demand more generally will also behave in the medium term and further ahead. And that applies to the definition of business, leisure, appetite range of experiences, how we book, via what channels we book through, booking lead times. So it's really important not just focusing on when, but also how. And I think we can look to the global financial crisis and recovery periods as a proxy. We can look at historical booking channels and costs, but the framework going forward, will be very different. And I think, we need to invest more in data analytics, look at a much wider pool of data, versus historic information, and try and just be a little bit more innovative as we look forward, because there will be some structural changes and risks to key demand segments, which we relied on pre-COVID.
So let's talk a little bit about some of the prior cycles. Is there a comparison to be had? Our industry, as we all know, is somewhat cyclical, and it seems like these cycles continue to shorten. Is there a comparison to be had with some of the prior cycles that the industry had experienced? I know we never dealt with a healthcare issue that we've been dealing with for the past year and a half, where absolutely everything came to a standstill. But from a recovery point of view and some of the learnings that we might have had, is there a comparison? Are there learnings that we could have put to work?
I think it's a really good point. I think ownership structures today, first of all, are really different to the structures that we saw during the global financial crisis, where over leverage was more of an issue and extend and pretend, the famous saying, was a key feature. Although to some extent, some might argue that this is being said this time around too. But if you look at the recovery profile, for example, for the regional UK hotel market, that took 5 years, with corporate and group and meeting and events demand slowest to recover. I think today over leverage is not an issue. Post revaluations, we've seen LTVs at the 60% level for some assets, lower than pre the global financial crisis. But structures are more complicated now. We've had more sophisticated investors come into the sector, more institutional investment. A lot of ground leases were done in the lead up to COVID. And I think this time around, while there are some similarities across the different European hotel markets, I think what will differentiate recovery this time around is the impact of different legal responses, government support packages, restructuring regimes. Means that, every market has responded differently, and we might see different recovery curves. But if you look at the UK, for example, business loans, employee furlough schemes, moratoriums on evictions, that means hotel businesses have actually been able to continue to trade in circumstances that normally, would have triggered distress. I think banks this time are in a better place, as I mentioned, in terms of LTVs. And what we'll see for this cycle is different recovery periods for assets based on their location, demand mix, segmentation, with changing consumer behavior, the game changer here, and the winners managing to keep up with this.
Nikola, the banks and lenders generally have been very cordial up until now during this downturn. Is it really because the leverage is not an issue, or the lenders realize that it's not, that if they were to foreclose on these assets, they cannot change the outcome overnight? We are dealing with a public health issue. And when the borders are closed and everybody is dealing with quarantine issues or social distancing issues, there is not much more that can be done. Do you have any thoughts on that as to how long will this last, and will the shoe drop?
Yeah, it's a question that everyone's debating at the moment. I think, look, clearly we've seen limited product come to the market so far. We've seen single assets being sold to release liquidity, with banks and owners having consensual conversations, but they're not necessarily coming to the market as a discount. There's a significant lack of supply, and so generally strong pricing has been achieved. I think what's pretty clear this time around, lenders, they don't want to take control of portfolios and assets. They've acknowledged they're not the right people to do this. We've seen some private equity houses throw in the keys due to an assumption they won't get full recovery in line with the holding period, but that's really been limited here so far. I think banks this time, they have to be seen as well as doing the right thing. Obviously, certain governments have been very generous with the schemes out there. So I think distressed M&A in this crisis will follow a different pattern to the global financial crisis because of this. I think we'll see some distress. It's just a case of when and where. Right now, there's very much a watch and wait approach, particularly as we go into the summer, where owners and operators are hoping to recuperate losses. I think it'll be interesting, though, post the summer. The agents and the brokers are seeing a lot more valuation instructions due to the lifting of the material uncertainty clause. In September, we've got VAT being put back up in the UK. Then onwards, we've got the furlough scheme ending. So, Q1 next year and beyond, where we get to a point where there has been 2 years of refinancing and debt rolled up and accumulated, we might start seeing some action there. But I think right now it's still highly uncertain.
Is the capital available in the market? Are the capital markets fairly liquid? Can people go and refinance? You mentioned that you folks have recently done recapitalization of a portfolio. Is that readily available? And what kind of lenders are in the market that are lending money?
Yeah, I think both on the debt and equity side, pre-COVID, we saw a lot of appetite in our sector, a lot more sophisticated investor types in the market, from institutional investment, both on the equity and debt side, ground rent funds, lease companies. Post-COVID, it's pretty clear there's pretty significant equity sitting and waiting. Private equity's back in abundance here. There's a number of new entrants coming in, sitting on dry powder. There's a lot of appetite there. In terms of the lender universe, it's diverse, but it's not as diverse as potentially we'd like it to be. There's a lot of players out there offering to come in and offer mezz, but clearly, that will come at a price. And, across lenders that I've been in contact with, some are not in the market at all. They're wanting to focus on their existing loan book. But there's others out there that actually see this as an opportunity to lend. Clearly, it depends on the asset, the location. But there are lenders there in the market from the banks, that is, in terms of senior debt, who are willing to look at new deals. I think anything with a staycation aspect is popular, and then there's less appetite on the development side.
So new projects would have a bit of a tough go in trying to put the cap stacks together. Is that what I heard you say?
Yeah, but I think on the flip side, private equity that typically wouldn't be very keen for developments. Suddenly, I think because of that limited product coming to the market so far, those especially that have to spend out there, they've started looking at different opportunities. So, a number of PE houses, distressed debt funds I've spoken to actually would consider developments. It kind of makes sense. If you open up on the cusp of recovery, there might be a distressed angle if a forward sale hasn't materialized, and it might be a good opportunity to get into some markets as well, and open up, like I said, on the cusp of recovery, and maybe when some of the pipeline risk has started to fall away.
Well, thank you for that, Nikola. Let me turn it over to Sam, and I'll be back with you in a moment. Sam, you're muted. This is the most commonly used sentence in the world that we live in,
especially with the hosts. Yes. Well, Nikola, thank you. I have a question. You mentioned the word customer behavior and maybe the changes in customer behavior. Could you talk to us a little bit about what you have observed, and perhaps also what kind of feedback and advice you are giving to the hotels regarding this matter?
Yeah, sure, of course. I think clearly on the leisure side, we've seen some interesting trends. I mean, clearly the staycation effect is hugely popular just because there is no other choice. We're seeing an emerging growth priority in visiting family and friends, much more than historically. I think there's just a question on whether that remains post the recovery. I think more of the structural changes will be on the corporate and meeting and event side, especially short term, and will formulate how they will recover. And I think on that corporate side, there's obviously risks relating to less travel with ESG and corporate budget recovery. But there's also the consumer behavior part here, where obviously we are seeing higher desire for more flexibility. Companies are starting to also offer this to employees, and that in turn will impact hotels. Now, it could be positive. It could be when employees come into the office, they come in to be sociable with their team, with clients, and that's actually where hotels can play a part by capitalizing on this, especially in the lobby area, and food and beverage also plays a really, really important role there. I think consumer behavior, as I mentioned, ESG commitments, we're not just seeing that on the investor side and the lender side, but also importantly on the consumer side. This is becoming, much more normal now, and is expected of hotels, and we've really seen this accelerate during COVID. And I think other new consumer and brand behaviors that we're seeing, clearly technology is going to reshape the industry post-COVID for years to come. So we've really seen an acceleration here in terms of how we interact and use technology, and other trends that we saw pre-COVID, lifestyle, focus on health. All of that's been accelerated, and clearly, operators and brands will be the winners if they manage to keep up with that and capitalize on it.
Yeah, one of the larger areas in hotels are, of course, the large meeting rooms, and of course that has put a halt in any large meetings are not happening, and it's all hybrid. Any advice that you give to your clients about maybe they need to rethink how to utilize this space? There are so many different hotels and brands that are totally starting to rethink what they're going to do with this, since it's not working the way it used to.
Yeah, I think there's a couple of opportunities there where potentially big meetings could actually be more prevalent in the medium to long term, especially if companies do decide to go more flexible. So, what offices will have to do there, or companies will have to do there, is, find more flexible ways and arrangements to reconnect with their employees, drive more engagement face to face. So actually there could be an opportunity for bigger meetings, with smaller meetings obviously at risk. So it's still really early to tell. I think that corporate behavior is the one thing that certainly our client base are most uncertain about, and we don't think we will know in what form that will come back and when, for another year, right? It depends when companies start bringing their employees back to the office. We see how often they go back to the office, if they have a fully flexible choice to be there or not.
Right. Yeah, and another thing that you mentioned was about reducing staffing levels. That is in order to perhaps introduce some new technology and so on. But the service, after all, is the lifeblood of the hotel, and that makes the building come alive. Any thoughts? Some good advice what they should be looking at when you talk about staff reduction at the cost of service, or is it looking at more efficient ways of operating the hotel?
Yeah, it's a really good point. I think, at Alvarez, our bread and butter is anything to do with turnaround, performance improvement. But I think, as you've mentioned, not only at the cost reduction, but actually looking where value can be created as well. So something we've been helping a lot of owners and operators with, and supporting on particular, is, what can they automate to be more faster and efficient? You can look at the head office level, for example, finance processes, and that goes right through to on property as well. There's certain things you can potentially maybe compromise on. I think housekeeping is not necessarily a source of saving or one to compromise on given the pandemic. But there's other areas like incorporating and utilizing contactless technology into guest engagement. That might be, check-in, check-out, which, whilst is pretty prevalent in the budget hotel sector, can more of the mid-market and upscale segments capitalize on this? Payment processing, remote restaurant ordering, all areas to explore. What can be outsourced or offshored that doesn't compromise risk or service levels and makes sense for the business. And I think, as you mentioned, that people element is still so important. The industry needs to make sure that they continue attracting and retaining people. But if technology can accelerate something for guests, and that's what they're used to, why not? I think it means that at least owners and operators can better utilize staff in different areas, especially given we've got an inflating labour cost market ahead, with some pretty worrying cost increases as we look ahead.
Yeah. Well, thank you very much, Nikola, for these answers, and let me hand over back to Abid for any final questions.
Thank you, Sam. Nikola, one last question before we bring our next guest in. If you were to look at sort of the markets that are performing better and types of hotels that are performing better, is it the luxury segment? Is it the economy segment? Any thoughts on that, and where the best turnaround opportunities are in our industry?
It's a good question. I think generally the economy and mid-scale sector is thought to recover the quickest. They can get occupancy growth earlier on. Performance for luxury is held up as well, and that's in high desire from investors. It's just a bit more resilient from a cost perspective in terms of guest expenditure. But we've really seen, I guess, a variety of behaviors. I think there's a flight to resorts at the moment. There's a flight to staycation assets. There's a flight to domestic leisure. But also, we've seen interest, although transactions haven't necessarily started happening in gateway cities, because, as and when travel is lifted, it all comes down to location at the end of the day. So, we've seen investors who are willing to invest in, big black boxes in urban locations that are reliant on corporate and meeting events demand, possibly hoping to get a discount there because they'll be able to go into strong locations. But I really think it comes down to whatever investors go for, making sure that they keep up with the various trends that are out there, and consider changes that have been enabled by COVID, from, like I said, implementing technology, reducing operational cost savings, and just really rethinking that overall product and commercial strategy as well.
Well, thank you, Nikola, for all your feedback. Please stay with us. We'll have you back in a moment. But particular point, Sam, let's bring Dermot Crowley up. Dermot, congratulations on your recent appointment. As a matter of fact, if I recall correctly, you officially transition into your new role tomorrow. Am I correct?
No, actually, it's actually towards the end of this year. I hand over the CFO responsibilities tomorrow, but I take over as CEO officially towards the end of this year.
Oh, well, fair enough. Well, congratulations. So
Thank you.
as you prepare yourself, Dermot, for this new role, for the new chapter in this life cycle of Dalata, what are your priorities? What are you preparing for?
Okay. Well, I suppose the first thing at the moment, we're doing a lot of work on reopening the hotels effectively. Now, we stayed open since the end of the first lockdown for essential services, and the government subsidy supports in Ireland have been quite positive. So that's left us keep all the hotels open. And we're looking a lot as to what the next 2 or 3 months look like. But if I look beyond that, which is probably more interesting, my kind of key priorities as I move into CEO role is people really is, and you mentioned it previously, is the number one priority in our industry. People are crucial. So we're very focused, and I will be increasing the focus on we develop our own people, because as we grow, we like to have a lot of internal promotions. We like to give people the opportunities to progress their careers within Dalata. So that is very, very important. Because in fact, we've taken on in our graduate program more graduates for September than we ever have before. Because we see there's a potential shortage of people now. Obviously, we have a strong growth pipeline to fill as well. Looking beyond that as well, you mentioned ESG, which we think is going to become increasingly important post-pandemic. I mean, it kind of struck me really when I was kind of working from home last April when this had just started. I always felt reasonably confident that vaccines would arrive and science would come up with solutions, and that we would eventually get out of the pandemic. But it kind of struck me that we live in a cozy world, and we think these really huge events won't happen within our own generation. And if something happens in terms of the environment, well, there really is no turning it back. So I think I always felt that there would be an increased focus on sustainability, and I think we're beginning to see that, and we're beginning to see an increased focus amongst our corporate customers in their RFP specific questions about our plans of sustainability. We're seeing it amongst our fixed income investors, the guys who are funding our properties as we roll out. And we're also seeing it amongst our equity investors as well in the guise of the overall ESG component of our business. So one of the things we're lucky in terms of Dalata, in terms of ESG, it very much ties in with the way we believe in doing business. Fairness is at the core of everything we try to do. But what we do need to improve on is how we measure ESG, be it in sustainability, be it on the social, how we deal with our own people, how we engage with the local community, and how we perform in terms of governance. So that will be a big focus for me as I take over as CEO. I would have created something in Dalata called Dalata Digs Deep, which is our charity program that supported Great Ormond Street in London and the National Children's Hospital here in Dublin. And that is something certainly I want to see continue and grow. And I'm encouraging all the hotels to really engage in the community. I think we have a big advantage in Dalata in that the average age for hotels is only 15 years. So we have a very modern portfolio. And I think that's going to be crucial in terms of sustainability. So I see ESG actually and the various components of that, and sustainability especially, as not just something we need to do, but as potentially an advantage versus our competitors. A lot of older hotels out there, a lot of smaller individually owned operators. So I see it as, rather than something we have to do, as in being a competitive advantage for us. The next thing I'm really trying to encourage people as I go around to our hotels at the moment is get them to think of innovation. And innovation doesn't just mean technology. Clearly, it does mean technology. It can be the smallest ideas where people look to do their jobs a bit differently, come up with an idea that might attract a different type of customer into the hotel. And clearly, we all need to be thinking about how our customers and our employees are going to change their lifestyle over the next 12 months, which is something Nikola touched on there. I mean, the reality is we don't know how the corporate customer is going to come back. We're all guessing, as I think everyone accepts there will be a reduction in corporate travel. We just don't know how much. So what does that mean for our meeting and events business is something we're trying to look at carefully as well. But the key thing is that the organization is operating in a way that is always outwardly looking at what's happening around itself, as opposed to thinking, well, we're doing it the right way and nothing is going to change, and we get back to a normal, because normal is going to be very, very different. And in that, guys, as well, food and beverage will be something I would put an increased focus on within Dalata. I think it's an area we can work on a bit more, because I think, again, customer requirements will change in that respect. I think if people aren't working in the office 5 days a week, and they're coming in for 3 or 4 days a week, and they're likely to have more meetings outside their offices. So how we cater for that in lobbies or meeting rooms is potentially an opportunity for us as well. And finally, a big focus for us is we've always been a growing company, and that will continue. We opened our first hotel in Glasgow in August, and then we opened 6 further hotels between here and the end of May, in places like another one in Glasgow, Bristol, Manchester, and Dublin. And growing that pipeline further would be an important priority as well. So there's lots to do, lots of exciting challenges ahead, and really looking forward to it.
Well, certainly, I think your plate is going to be more than full, and we wish you the very best as you get settled in your new role. Dermot, from a CFO's lens and now as a CEO lens, has Dalata's liquidity challenges during this pandemic tell us what initiatives you undertook. How were you able to get your balance sheets to strengthen? Or did you have some challenges in getting access to new capital? Could you share some of those things with us, please?
Yeah, I mean, it's been an interesting journey. I remember doing investor relations at the end of February in last year, and actually I was chatting to an equity investor, and his parents were in Milan, and he was telling me they were queuing for food, and I said, "Geez, this is coming really faster than any of us thought." And then you start looking at the news, and you see Milan hotels at 10% occupancy, and you say, well, look, this is heading towards Ireland and the UK really, really quickly. So the following week, we actually called our banks in, and they subsequently told us in Ireland we were the first corporate to actually approach them. And we said to them, look, our industry is going to face, very significant challenges. So we got our covenants adjusted for the balance of 2020. So that bought us time straight away on the debt side. We didn't have to worry about our banks. The big plus for us is that we've got a very strong asset-backed balance sheet. Our LTV at the moment is about 23 or 24%. So that was a huge plus in dealing with the banks. Then we started looking at liquidity generally. Obviously, it was a very uncertain time. If you think back then, naively, we all thought, look, we'll be out of this in September, and we're going to SDR webinars. We're comparing to previous crises and how long it might last. We always took the view, though, let's always plan to have liquidity for far longer than what the kind of people were thinking generally that COVID would last for. So we were in discussions with DECA about who we have a very strong relationship, about doing a sale and leaseback of our Clayton Charlemont Hotel, which originally was to fund an opportunity we were looking at in London, which we walked away from. And then we said to DECA, if they were interested in continuing on with the transaction, we would still do the sale and leaseback, which we did at a very attractive yield of just over 4.25%. We completed that deal towards the end of April, and that gave us an additional 65 million in liquidity. Then it was clear to us in terms of our banking club that this was going to go on much longer than what we'd envisaged. So we need to reset our covenants for a much longer period. So we got our covenants really changed till June 2022 and got an extra 40 million of facilities from them. And we finished that in July of last year. And then the final part of it really was we raised an additional 94 million from our shareholders in equity. And the purpose of that was to allow us start construction of our Maldron Shoreditch Hotel in London, which has just started construction in the last month or so. That's about 30 million sterling build. And also to strengthen our balance sheet to take advantage of potential opportunities that we saw coming up. Now, what has happened is those opportunities, for the reasons Nikola explained previously, are much slower in emerging. But where we are now in terms of liquidity, because we haven't burned through anywhere near as much cash as we thought we would, because we've been extraordinarily good in terms of saving on costs, and also government supports have been more generous than what we would have initially been budgeting for. So we could go back into a full lockdown in both countries, the UK and Ireland, and survive right into the middle of 2023. I would say the other thing that the liquidity allowed us to do was that we've retained all our core teams at our hotels. So as I've more or less finished a tour of all our hotels at the moment. And literally, if you go in there, all our management teams are still in place. And that's a huge advantage, because as hotels reopen, there's been lots of complaints from customers about service and experience. And obviously, as we take on a lot of younger people who are working for the first time, we've experienced managers to take them through that if something happens on a shift, they're there to help them. It means when we go back out talking to our large corporates, which are really important in Dublin especially, we can say to them, the general manager is still there, the sales manager dealing with the same sales manager. So the retention of our core teams has cost us a bit of money, but it'll be critical to us. It'll be critical to us going forward. It's easy to refurbish a hotel. It takes years to rebuild rebuild teams. So that's what I'm probably happiest about in terms of what liquidity allowed us to do was keep those teams together. And guys, always remember, it's a people industry. If you don't have the right people, you can forget about everything else, technology, whatever. If you don't have people in hospitality, it just doesn't work for you.
Absolutely. Very well said. And congrats on being able to retain all your teams, particularly during this very, very, very tough year that all of us have dealt with. Talk a bit about the new hotels coming online, Dermot. I know you have multiple projects that are well underway. were they delayed? Are you still able to have access to construction loans for the new projects? What is that environment looking like?
Okay, so we don't, of our 13 hotels in the pipeline at the moment, we're only building two ourselves, one in Shoreditch and one here in Dublin. And we just fund that out of our corporate facilities, so we don't rely on construction finance per se. And then in our leased hotels, typically what happens is we do an agreement for lease with a developer, and then the developer goes to a fixed income investor who is familiar with our covenant, and then they fund the construction of the hotel. I think we're the only hotel group in Europe, large hotel group in Europe, that since the start of the pandemic has paid all their rent and has never even threatened not to pay our rent. So we've literally paid every cent or pence that we owe in rent. And that has really improved our reputation hugely amongst large partners such as DECA, Union, Aberdeen Standard, M&G, Aviva. These are all either current landlords or future landlords. So protecting that relationship was really, really important just because that is the funding effectively for our pipeline. So in terms of our pipeline, the stuff that was under construction, it only got delayed by whatever the restrictions were in that country. So the pipeline in Ireland, the two hotels we built in Ireland, have been significantly delayed because of the fact that the restrictions in Ireland construction were far greater and unnecessary to a large extent than they were in the UK. So at the moment, we've 7 hotels opening between here and the end of May, starting with, as I said, Maldron Glasgow in August. Then we're looking at the Clayton in Manchester opening in November, and then early next year or late this year, depending on construction end dates, we'll be open Clayton Bristol. We'll be open Maldron Manchester. We will be opening the Samuel in Dublin, Clayton Glasgow, and a Maldron in Merrion Road. So they all are proceeding and will happen. Where there has been some delays is for those developers who hadn't secured funding prior to COVID. So that market, even though our relationship with the fixed income investors is very strong, that market for securing development finance, has definitely slowed down, although we are starting to see signs of interest again as reopening. And I think from September onwards, we're likely to see more interest in that area again. So that's what slowed down the later end of the pipeline as opposed to the pipeline that was under construction.
Okay. So, Dermot, I know you have owned assets and lease assets. Is there a preference? Does one model work better for you than the other? Can you share your thoughts on that?
Yeah, so at the moment of our rooms, we've about 70% owned and 30% leased. And if we were to take the current pipeline and finish that out, that would switch to about 55-45. We like having owned assets, right? And we've seen the benefit of it over the last 15 months because it gives you great flexibility with the banks. And for instance, we were able to do a sale and leaseback, which gave us 65 million liquidity. So having owned assets increases your funding flexibility. So we do like that. The other reason we like owned assets is that we have a track record of, in particular, building new assets and adding significant value. So if I take that Clayton Hotel in Charlemont, including the site price, we opened that at the end of 2018, and including site price, the all-in development cost was about 41 million. And we sold that to DECA for 65 million in April of 2020, and we still have a very valuable leasehold interest in the property. If I take Maldron and Kevin Street, again, we've added, when the valuation pre-COVID was something like 77% higher than what the cost of that building was for us. And I could take Clayton Dublin Airport, where we did a significant extension. So we've got very good development experience within the group, and we use that to add value. However, you can't own or develop all your assets because it just takes up too much cash and you're constantly raising equity from shareholders. So the combination of leasing is whereby basically we've no financial commitment till the hotel opens. That works very well for us as well. So it's always a mix. In good times, we were, 2019, we were producing about 100 million in free cash. About 15 million went to dividends. And then the plan really was to reinvest the balance of that into developing hotels. So whenever we get back up to normal in 23, 24, our plan really would be, again, look at things like dividends, but reinvest the vast majority of the cash we're producing into either developing new hotels or potentially buying existing hotels. So it'll always be that mix.
Well, thank you for that, Dermot. Let me pass it on to Sam, and I'll be back with you in a moment. Sam.
Thank you. Yes, Dermot, I'm very happy you talk about people, and that's my passion, is developing people. And because, as I mentioned earlier, with Nikola, it's the lifeblood of the hotel. I went to your website last night to take a look of a little bit about the culture, and I was really happy to see that you had a video showcasing sort of a career path for an individual. Can you talk a little bit about the culture and how you're developing your people from maybe a starting position to becoming into the management position, and the chance to grow with the company for a long term?
Well, it's funny, Sam. Okay, when I look at our people, right, I look at, what I love about the company is we've great diversity, right? And when I look at, and I think that's one of the strengths of Dalata. It's diversity in its truest meaning. It's gender, it's race, critically it's interests as well. Okay, so people have different interests. I also look at things like age diversity. I always think, in Ireland we love to go for a drink in a pub. I always think the best pubs is where you've got loads of different people interacting there, as opposed to, whereas all young people are all older people, right? So diversity is really important within Dalata, and the people who are on those development programs are really, really critical to us. So you can have people who come in as graduates, whatever area that they focus on. They have the opportunity, or they don't have to come in as graduates. They can come in operations or in finance or sales. They literally have the opportunity to come through the organization, either in central office or become a general manager, or if they just want to be a food and beverage manager, they want to focus on rooms. We've lots of development programs. And the key thing there is that we continue to grow so we can continue to offer them career opportunities. So if you want to progress in Dalata, there is nothing stopping you do it. However, right, it's very important in a hotel company as well, is that you have a lot of people who maybe, I was in Sligo yesterday in Derry, who just want to live in Sligo or want to live in Derry because that's where their kids are, that's where their family are. That's very important as well, because they're the lifeblood of a hotel as well. The people who are there for years, that they understand the locality, they understand the local customers, they understand the corporate customers. And it's important that Dalata is a home for all those people as well. And then critically, I think in our industry as we go forward, is that we need to make sure we take care of our transient workers as well. And by what I mean by transient workers, it could be in housekeeping, where sometimes in Ireland we find that we employ someone from a nationality, they tell their friends Dalata is a good place to work in, and then suddenly we've got a huge number from that same nationality working there because we've taken care of the first 2 or 3 that have come through the doors. Or critically, what we're finding now, because in Ireland we don't have as many foreign nationals coming into the country because of the COVID restrictions as we normally would, there's a huge reliance on students who quite often in Ireland tend to go away for the summer, and we've got a lot of them working in our hotels. Those students could be the sons and daughters of a CEO and we don't know about it. They could be related to someone who's going to get married next year who might have the wedding in one of our hotels. But they also critically will tell the next year of students and the year after that Dalata is a really good place to work in, and that'll make us sourcing employees easier or less difficult. And that's going to be particularly critical in the UK. Because that is where the biggest shortage of labour is going to occur. So I'm certainly determined that in Dalata, yes, it is really important that you can develop with Dalata, but also that for those who want to come in and work in the industry for 6 to 12 months, that they have a really positive experience within Dalata and they tell loads of people about it.
Right. Now, you are doing also recruitment from hotel schools for your hotels. One of the gripes that I've heard here in the industry is that many of the hotel school graduates don't stay in the industry. What is your encouragement words for those people who are rethinking, well, is it worthwhile to take this job which might be a grind and maybe not well paid? I could get much better job in a startup and more relaxed atmosphere and more benefits. What would you tell them?
Well, I come from outside the industry, right? But I mean, my own son has just started working in one of our hotels as a student, right? Like, what a great place to meet people. You go in every day, you come across families, you come across corporates, you come across all these different type of people. You're getting to interact with them. immediately when you join. I think as an industry, and then if you progress up, you're given, in our hotels in any case, because we operate a decentralized model, you're given serious responsibility. You could be the bar manager and you're responsible for the revenue of the bar, the payroll in the bar, and you learn from that and you become a food and beverage manager, and ultimately you become a general manager where you actually control that business. So there's so many varied things. Your day when you work in hospitality, there's so many different challenges. I mean, the most difficult thing for our people working in our hotels in the last 12 months is the lack of customers. So I would say the hospitality industry is, a wonderful place to work, and it's been difficult for the last 15 months. But hopefully there won't be another pandemic for a long while. But I would say to people, compared to some other jobs I can think of, and I don't want to call them out, God, getting to meet people every day and seeing real life around you. Why wouldn't you work in the industry?
Right. Well, one benefit, if you say anything, is that this generation of hoteliers have learned something the previous generation didn't know anything about. Meaning is that how to deal with this a global pandemic and how it affects everyday lives of everybody and yourself and so on. But Dermot, thank you very much for this, and I'll hand over to Abid for final questions.
Well, thank you. Sam, it would have been better if we didn't have to learn about the pandemic, but here we are. We got thrown into it and we all had to learn. Dermot, one last question before we bring up our next guest. Any focus markets where you are focused on for your growth?
So our main focus is the UK at the moment, right? And we've stated that for a long while. And it's the big cities in the UK where you've got a strong combination of corporate and leisure. One of my own ambitions as I take over as CEO is that we do move into Europe as well. But we'll only take the right opportunities, no matter whether it's in the UK or Europe. So you can't switch a location of a hotel once you go into it. You can't put it on wheels and just move it down the street or move it somewhere else. So we'll take our time, but we certainly would like to expand into some of the larger cities in Europe as our presence in the UK grows. So that's where our main focus at the moment. The UK, with certainly looking to casting an eye towards Europe.
So most of your projects are urban locations. Nikola had talked about the recovery of business travel segment. Are you seeing any trends that are changing? Are you concerned at all as to what the future would hold for the business travel?
No, it's too early to see corporate trends. There's practically no corporate travel at the moment except domestic corporate. I think, look, it's highly likely there will be a reduction in corporate travel, right? Where we need to position ourselves to get a bigger share of that. Okay, we've modern hotels. We'll focus on sustainability. We'll focus on ESG. We'll focus on. I'm very careful about serious reduction in costs and focusing on cutting labour, because if you want to differentiate yourself from the competition, your service is critical. So you need to be careful you protect your service. We do a lot. We have a shared service centre down in Cork where we've centralised payroll, we've centralised procurement, we're going to centralise things like income audit, and that's fine. But we need to be really careful as regards the service levels, because that's what corporates want as well. So I think what we're trying to focus on is through investment in technology, how we interact with our corporate customers, high service levels, sustainability, that we just get a bigger share of what is likely to be a smaller market.
Well, Dermot, thank you so much for all your input. Please stay with us. We'll have you back in a moment. At this particular point, I'd like to bring up Lionel. Lionel, thank you for your time and thanks for joining us.
Thank you, Abid, for having me, Sam. Thank you as well.
So, Lionel, first and foremost, congratulations on starting a new venture at the deepest, darkest time in the pandemic and possibly for the industry that we had seen for a very long time. And congratulations for gathering up 10 hotels in a very quick time period. Talk to us about what that process was like. Now, you were doing leases as well, but a bit of hybrid lease. So talk to us about the advantages or disadvantages of a lease versus a management contract, and why did you choose to go one or the other?
Thank you, Abid. To describe setting up this business, one word, very scary, and a challenge with the likes of which I've never faced. We certainly, when we decided to go ahead with the business, had not envisaged the pandemic extending for as long as it has. We had hoped to have been trading the hotels that we secured in January of this year. However, with the lockdown, we weren't able to open them until middle of May. Why we chose to go down this route of a hybrid lease is because both Viv, my business partner, and I come from entrepreneurial backgrounds. I've been in hospitality for 30 odd years, but the history of understanding landlords and the landlord-tenant relationship through businesses that I've been involved in. And where we stepped up to the plate with the Go Hotels was we saw the CVA of Travelodge, and we were being contacted by a variety of owners who landlords of hotels wondering, what am I going to do with this asset? Should the brand not exist? Should my tenant default on rent? And where does that actually leave me in this cycle as a landlord? And we put our heads together and we said that what we really want to do is make sure that whatever model we come up with, we don't overstretch ourselves to a landlord, but we add value to the landlord. And we demonstrate that by giving the landlord a priority rent from which they can then gain a valuation. And we set that rental priority rent at a level that is sustainable, that is achievable within the confines of the P&L that hotel has delivered historically. And in addition to that, we then say to the landlord, our skin in the game where we add value to you is that we will only get paid once we begin to actually become profitable. So we really have to focus our efforts on ensuring the profitability of your business before we will make any money. And landlords really felt that we're creating and adding value to them and showing them a resilience to belief in the market that these hotels that we're taking on board will turn around, will deliver profit, and in the days of upside, they will get a significant share of profit that adds to their priority rental and overall gives them an added value situation. And we have to add another dimension to this because it's all well and good, Lionel and Viv saying, this is what we can do. But in order to maintain credibility, we decided we needed to have a brand partner to work with because, as we know, the competition for distribution within our sector is rife. The costs of distribution are very, very heavy. And in a competitive situation coming out of the pandemic, the brand loyalty and distribution ability to attract in the guest. And we have a very big focus on calling the people who come stay in our hotels guests rather than customers, because we want to emphasize the hospitality side of things. But to attract these guests into the hotel, we really need to have a partner that has very strong distribution and also a strong balance sheet to support us if there was a similar situation to the extended pandemic. If we needed to have support on delivering landlord rent, we wanted a business partner that could come on board and help us with that. So we partnered, the Go Hotels is a partnership with Accor. They are also the operating partner of our hotels. We teamed up with them because we wanted to offer landlords a very seamless transition with a international brand, with a brand that had presence within the UK market, and with a brand that had the ability to transition these hotels into systems that we could then operate successfully. We, as I said, opened hotels in May, and having seen a very slow return, June has been a stronger month, and we are now beginning to see the green shoots of occupancy coming back into the business. And some of our hotels, rates have also begun to gradually improve. And in the interim, Viv and I have been focusing on how can we actually now grow this business. We started off with 10. 10's not really going to cut it for the future. We really want to grow this business. And I think you mentioned it earlier, Abid, we've got 5 more hotels that will join us in August and September. And we have a pipeline of hotels now that will be under consideration for us to invest with. And I say invest with because our aim is to put some skin in the game and go and jointly acquire some of these properties. We take a smaller stake, but again, showing the landlord our commitment to a hotel that we can acquire together with them.
Lionel, forgive me, it seems like we're having a bit of a sound issue. There is static coming through. So if I may ask you to speak up a bit so that we can get the static sorted out. Talk to us a little bit about the operating challenges in this very volatile environment. One day you getting ready to open, and the next day you shutting down. Where do you find the staff that you can sort of mobilize and demobilize at a very short notice? Well, tell us a bit about what those challenges have been like.
Thank you, Abid. Yes, it has been very hard for the people. Our team were able to transition with us. We insisted that, similar, to Dermot, we did not want to lose any of the team members in the hotels that we were taking over, because we realized that this is not a one-man show. We need to have the team members on side with us, and we needed a robust team to deliver the quality of service to the guests that we were wanting to attract and to maintain. So we also retained everyone. We particularly want to make sure that the leaders of these hotels, our managers, would stay on board with us. And some of them, unfortunately, found it too stressful. They really did have a challenge with going through the transition, going through COVID. So that made it a little bit harder in some of the hotels that we were about to open, and then we had to close again. So we prepare people, we train them, we give them refresher courses on systems. We've got to implement new hygiene regimes, and you train everybody up, you gain the momentum, and then suddenly, the football team's all got to sit on the bench. It's a struggle. Fortunately, we're up and running now. What we really hope is that we don't see another lockdown at the end of this year or at any other time moving forward, and that we can gradually and consistently build from a strong, solid foundation and continue to see the growth in occupancy. Okay. Coming back into the hotels, there were some team members that, we called them up and said, come back, furlough's going to finish for you. We need you back in the hotel. To find that these guys had actually flown home to other parts of continental Europe. And they were saying to us, we're happy to come back. Will you cover the airfare? And what salary increase are you willing to give us? So I think that with a limited talent pool in the sector that we've always struggled with, things haven't got any easier, and we've got to work as employers that much harder to ensure good career path, solid environment for people to work in, and for the team members to feel that there is better opportunity within our industry, good career paths, good variety of roles, and entice them in. We've got to work hard to entice. It's not a slam dunk. People just want to come in and work in hospitality.
Yeah, look, in the old days, we might have competed for talent with the hotels down the street, but now we also live in the gig economy. So there is a lot more other opportunities, and possibly a bit less stressful, if you would, that people can avail themselves of. So UK, since your portfolio today is predominantly in UK, UK is going through a bit of a double whammy with Brexit as well as pandemic. What do you think that the labor market is going to be like when some of these folks that are part of the EU might not be able to come back? How would the sector survive without that labor pool?
What we've found, and I think the pandemic has really demonstrated this, that people who wanted to work have found jobs. They've retrained as the Amazon delivery driver. They've retrained to work in the supermarkets that needed people packing online orders, and people have taken roles that once upon a time they would never have taken. particularly the airline stewardesses and stewards. You've seen many of them have retrained. Where I see our opportunity and where I see synergies is within retail. We know the retail sector has been very hardly hit. We've seen a number of the big retailers closing down, and I think we should be targeting that skill set to come in and work within the hospitality industry, because they're used to working with people. They're used to working in people-led environments. So we need to focus our efforts, I think, on attracting in the younger homegrown talent and the incentives. Give people the environment to work in. Maybe we've got to be more attuned into making sure there's a combination of education that we can offer team members, as well as good job prospects. So come and work for us, and we'll let you go on to day release courses. We'll encourage you to study. We'll help you with that study. So I think we've got to be creative, and we've got to target different sectors that have suffered in a similar way to the way we've suffered. And we will have to be more competitive, and hoteliers have that ability. Hoteliers create opportunity. Hoteliers rise to challenges. We've got to rise to the challenge with the labour market today. Within our sector, we've got to use technology. We do need in the budget sector to embrace technology further. So if British Airways can turn around and say to you, go to Heathrow and check in your own luggage and tag it up yourself and put it on the conveyor belt, why can't we have some more automation within our sector that still gives a guest experience and maybe creates some fun for that guest, or a different approach to how we work with our guests? We've seen robots come in Hotelm. We've seen robot hotels in America. There's a place for technology within our sector, while still making sure that a guest feels hospitality and warmth. Because we've always had this phrase in the industry, the home away from home. You can't pay lip service to that. It's still got to be somewhere where people feel comfortable.
Well, Lionel, just one quick go back to your point. In case of airlines, when they told us to go tag your own bags, I think that was actually a better service than what we were getting otherwise. But hotels have done a great job of looking after our guests, so maybe it's not the same comparison. Let me turn it over to Sam, and I'll be back with you in a moment. Sam.
Yeah, thank you. Yes, Lionel, I'm impressed about you had grown in such a short time. Could you share about the future plans? You must be a man of great vision, and you're looking already ahead 10, 15 years. How do you see Go Hotel going to be like that in the future?
Well, that's a really good question, Sam, as to the longer term future. I think the short term is easy. The short term for us is that we have these 5 hotels that will come on board. We go from 10 to 15 hotels. We will be in the region of 1,200 keys. We're going into Wales. We have only been in Scotland and England so far. We're moving into Wales now. We haven't yet gone into Ireland, Dermot, but that's on the agenda at some point in time. Longer term, I think that there's opportunity to consider many things for a Go Hotel. Could a Go Hotel become its own brand? Could it be a brand that we develop? Could we ultimately become, in 15 years' time, a brand that we then franchise to others? I think the key for us, though, and I think the reality check, Sam-Erik, is that right now what we want to do is provide something to landlords that hasn't been provided for in the past, whereby we're offering this hybrid lease model. We're saying to people, we're not going to give you turnover top up on your rent. We want you to take on some of the operational upside and downside that we have to take on as a tenant. But what we're offering you is added value, because the rent that we're paying, the priority rent that we're giving to the landlords, is something that can be valued at very competitive, sharp yields, because it's at a threshold that we can deliver. And the balance of rent that we then pay from the profits of the business are valued very similar to franchise value. Now, I can say this because we've got 15 hotels that have gone through the process with valuations and with banks, and it's proven, tried and tested that it works. And I think one of the key things, Sam-Erik, is when we look at the long term of this portfolio that we're taking on board and that we're building, we're very keen to ensure that we retain market share. We've got to be able to do that to deliver the right level of return. In order to do that, we've built in a CapEx model to each P&L that we've pulled together and based our projections on. And what we've shown contractually to the landlords is our commitment to invest CapEx into their properties, protecting their assets, and at the same time making sure that we can deliver the market share, grab the rate, make sure we get the occupancy, and drive a RevPAR and ultimately an EBITDA par that is long-term sustainable, that we can build on for the future.
Very interesting. Very interesting, your concept. I think this is looks like a winner to me from the way we have been talking with a number of people in the industry and how people are formulating their business model. But this sounds very, very, very interesting indeed. Well, I think I'm lost for words, so I have to give it back to Abid for your final question. So thank you very much, Lionel.
Well, Sam, if it's okay, let's bring everybody back together, and I'll continue to talk to Lionel at this particular point. Lionel, are you seeing any parallels to the downturns that industry has experienced in the past? What is the pricing power like in this recovery as opposed to the GFC, what we dealt with last time?
I think Nikola touched upon it earlier when you were talking about the businesses that recover within our sector post any world event or financial crisis. In my experience, the budget sector, economy sector is the first to recover. Luxury pretty much stays head above the water because there is always a market for the luxury end. And we've seen that with how hotels in Dubai and certainly in even parts of China where the luxury end of hotels were the first to recover. And STR reports were showing us that as soon as restrictions were lifted in Christmas, the luxury end flew. What we've seen, and it's been proven, is that the budget sector has not had to try as hard maybe as the mid-range and four-star properties because the traveling road warrior, the construction workers, they've all been traveling. And because budget and economy is that much more affordable, it appeals to a wider range of the populace. So our belief, and it's demonstrated that as soon as we've opened our hotels, we're already seeing that in June, we'll be able to deliver some profit share back to owners. That's in our first full month of trading these 10 hotels, that they're now open. We can actually turn around and say to owners, okay, we're going to be able to give you some profit share. It's small, but we can deliver some profit share. So I think the economy sector is robust. It has proven itself in the past to recover quickly because it appeals to a wider audience. And particularly now, people are going to have to focus on looking after the pennies. And, they need to get away. There's a frustration. You've got families that are, maybe in smaller accommodation, where you've got the kids and the parents, and the kids are homeschooled, the parents are both working, and they're fighting for internet, they're fighting for a piece of quiet in the home somewhere to work, they're working on the edge of a bed, and they want to get away. And if you can offer an affordable solution, then I think we'll see the budget and economy sector coming back faster than any other.
Fair enough. Well, look, all three of you talked about the impact of technology. Dermot, if you wouldn't mind sharing, what specific technological initiatives are you considering, and how do you think that'll benefit your operation?
Yeah, we've used the last 15 months, because obviously hotels have been very, very quiet, to roll out Opera Cloud version 2 right throughout our portfolio, which we expect to complete by the end of this year. Likewise, we're rolling out Symphony on the food and beverage side. And the reason we want, so basically by the end of this year, we want every hotel to be on exactly the same platform to deliver us far better information on our business than we would have had previously. So that's kind of from the back of house situation. We've invested a lot in a payroll software called Alchemy, which is a small Irish company, which helps us plan and roster our payroll very effectively, and also communicate through phones with all our employees. So we've increased our investment in that as well. We are looking at getting more stuff down to our shared service centre. So things like income audit, we're looking to get down, centralised, standardised on the back of that other investment to get that down to the shared service centre. So we're doing a lot to kind of streamline the admin part of the business. So that's one thing we've done in terms of technology. We have a new guest platform that we had to introduce in order to, when you come into the hotel since last year, you can book your pre-book your breakfast time, pre-book, or you can get food delivered to the room. So the guest directory is gone per se. It's been replaced by QR codes. So that's just some stuff we've done over the last 12 to 15 months.
Fair enough.
And then we're constantly looking at, I think the biggest area in our industry that'll change, I think in reality, if you think about a hotel bedroom and hotel lobby and everything else, they do change, but they don't change significantly. A bedroom, you still need to have a good shower, you still need to get a good night's sleep, which means, the room isn't too noisy, you've got a good bed. I think what's really changed is now everyone needs Wi-Fi. They wouldn't have needed that 20 years ago. But what has changed in our industry continuously is how people book rooms and how they book our services. And if you look at what the OTAs have done and what Google have done and the booking journey, so that is something we're constantly outwardly looking at. And I think that will continuously change as people use their mobile devices more. So that's something we've got a real close eye on. And the last thing then we're looking at, we don't want to dive into an investment. We just want to see how virtual meetings, the hybrid meetings, are going to take place. But no one knows yet, right? Because corporates aren't back. But I listened to a guy from Microsoft on one of these webinars, and I think he said something like that in one of his large conferences previously, he had 10,000 customers at it, but when it went on virtual, he had 23,000. And what he was saying is that he still expects to get those 10,000 back into the hotel, into the physical conference, but he doesn't want to lose the other 13,000 as well. So I think that's going to be a challenge for us all as to how we meet his requirements. Obviously not as big as that, but meet requirements for that hybrid product. So we're looking all the time. But anyone who says they know what corporate's going to do when they come back, we don't yet, because the corporates aren't back.
Yep. Well, and Nikola, if you wouldn't mind, our industry has always been resistant to technological initiatives. It's expensive, changes too quickly, don't understand it, companies change, all the reasons that we all know. What gives us confidence that this time around the industry will embrace the technological changes? Nikola?
Yeah, I think, look, with all the various challenges going forward, it's just about seeing what we can future-proof to provide resilience there. We can't future-proof a hotel from the pandemic, but we can learn from some of these things. I think it's being smart and it's looking where operators can be more efficient, right? So it's not necessarily investing in technology that might be a short-term trend. It's, as I mentioned, what can you automate where you can free up people to spend more time on doing more value-add jobs and initiatives where they in turn can add more value as well. So I think it's really what can be automated, what can you do back of house, and as opposed to kind of shorter term gimmicky technology advancements. Because look, clearly, as you said, these come at a cost, and it might be a short term trend. Having said that, I think COVID has resulted in certain consumer behaviors where they will expect certain technological trends, and that in particular when it comes to booking, ordering, for example, food and beverage, checking in. And so I think, some of those trends will be here to stay.
Fair enough. I guess we have done a relatively good job in embracing the consumer-facing technology because consumer has mandated that. They almost demand it. To that point, let's talk about some seismic changes, some structural changes that you see in this industry going forward. Nikola, if you wouldn't mind starting out, tell us maybe 2 structural changes that you see in our sector.
So as a result of COVID, I think investors will and operators will, revisit operating models where they can. I think hotel management agreements going forward will have a heightened focus on termination position. We'll look into more detail what force majeure looks like to allow for a future pandemic, for example, or a black swan event. It might not be virus related. It might be due to climate change or something like that. And leases, which we've discussed already. But I think, some of the biggest areas of change coming out of the pandemic, because we've seen landlords who have signed up to relatively low coverage leases are simply very, very exposed. So we'll see lower base, higher variable, more hybrid forms like Lionel mentioned that Ago are doing, where the return to the owner will not necessarily diminish if predicted numbers are missed. So the shape of that return will be more equitable, and the risk will become more aligned.
I don't know if I'm still connected, but it seems like I might have dropped out.
We can hear you.
Oh, okay. I'm not sure what happened there. So, Lionel, if I may continue with you, just 2 changes that you're seeing in the industry, please.
I think there's going to be a very different approach again to distribution. I can see us demanding more of the brands and the brands coming to the table. So structurally changing the way that we operate with a brand and how the OTA relationship manifests itself moving forward. So I think distribution will be a very, very big focus. I think when you also talk about structure, let's just talk about some physical structure maybe as well. I think new build hotels and existing hotels, depending on how the recovery takes place within the meeting sector, within the spa sector of our businesses, the leisure element, we all want it. There was a call that Nikola and I think that Dermot was on as well, that somebody said that if it wasn't for the desire we have for travel, the pandemic would probably be over by now. But we can't curtail people's desire for wanting the vacation. But how they spend that vacation, I think, may change as well. Do we see a bigger influx to the self-catering model, or do we see the traditional hotel with the big banqueting and the leisure facility maybe taking a different path, and us as hoteliers finding alternative uses for space? I think physical structure of hotels will also change.
Okay. So one last question for the 3 of you. I know we've run over our allocated time, but concerns for the industry in the mid to long term. And Dermot, if you wouldn't mind starting out, maybe one concern that you think is a legitimate thing that needs to stay front and center on our radar. Dermot, you're muted.
I think in the UK specifically, the availability of labour is probably the biggest single issue. I think, Brexit, certainly hasn't helped that. And then you put COVID on that, and a lot of people returning to their home countries. And the fact that hospitality was seen as an industry that got so hammered, and where job security wasn't what it might be in other industries. I think certainly in the UK, that is the one area that we all need to focus on and try and make the industry a very attractive one to work in again, and really show people the benefits of working in hospitality. So I think that's the biggest single threat.
Thank you. Nikola, from your lens, one concern for the industry?
So I would also echo labour, but as that point was very, very well covered, I think just, another point, as we've talked about it quite a bit, cost KPIs will change. I think we've seen over the pandemic, hotels have structurally adjusted costs downwards, and there's just risks that as we approach normality, that, certain costs are added back in a way that's unnecessary. So it's trying to maintain guest service with lower costs, which will be a key differentiator going forward, and without compromising on the people element as well.
Thank you. And Lionel, you get the last word on this. One concern for the industry.
So I've got to concur with Dermot 100% on labour and also with what Nikola said. But to add, I guess for me is the future of brands and how brands compete with the ever increase of alternative routes for the consumer to book different types of accommodation and how we deal with that as an industry.
Well, very well said. As a matter of fact, Lionel, that in itself is a whole new discussion. We'll have to schedule a session for that. Sam, unless there are any other comments or questions, I think we should be wrapping this up. Did you have anything else that you would like to add, or any comments from our viewers?
Not comments, but I think it's quite an interesting experiment that we are now seeing is that with the European Championship matches around Europe, how a number of people are meeting together. Of course, we had some little bit of a challenge when a lot of the Finnish fans went to St. Petersburg and by bus, and they came back. Many of them came back with a COVID. So it's a little bit of a challenge here in short term because people are not still safe, and some people are not taking the right precautions to protect themselves and protect others. So in the short term, I think we have to be wary, especially when the holiday season, because people are excited about traveling and how is that safety going to be assured for everyone so they can have actually a fun time and not a time that they didn't want to in the first place. But no other comments from anybody else, but I think we had a very good panel, Nikola and Dermot and Lionel, some great feedback. And I was just watching at looking at, UK is very famous for tabloids. So there was this EU immigrants, COVID and Brexit plunge hospitality into crisis was sort of the big headline. But I don't tend to feel that when I talk to you. I mean, I felt that there is a hope, and I think there's a way to get out of all this. So over to you, Abid.
Well said, Sam. Well, thank you. Thank you, everybody. Dermot Crowley with Dalata, Lionel with Lionel Benjamin with Agora Hotels, and Nikola Reid with Alvarez and Marsal. Thank you for your input. Thanks for your time. Really appreciate you joining us. Really enjoyed the conversation. Sam.
I also like to thank all the live viewers who joined us today. And if you are watching this as a replay, thank you very much for taking the time to watch this episode. And just let you know that we are also available as a podcast. So this episode will be available at the Hospitality Talks podcast. So on behalf of Abid and myself, we're both looking forward to seeing you at the next episode. Thank you again.
Thank you, everybody.